You're watching this Forex Preview here at XM.com. Thanks for joining us. I'm Christina Marujos. With me today is Senior Investment Analyst Mario Hadjikyriacos. We'll be taking a closer look at retail sales out of the United States on Tuesday and, of course, the outlook for the dollar. Last week's scorching hot inflation report out of the U.S., Marios, caused mayhem in the markets as Fed rate hike expectations were brought forward once again. Now, this week's retail sales report is probably going to be important as well, as investors will look out for signs on how the recovery is progressing. Therefore, what are we likely to see in the data?
Hello, Christina. It's going to be absolutely crucial, this retail sales report, because the markets right now are split on whether the Fed will raise rates twice or 3 times next year. And obviously, this retail sales data could tip the scales in either direction. Now, expectations are for another solid report. So retail sales are expected to have risen by approximately 1%. That's faster than what we saw in September. And it's also supported by various early indicators. So for example, credit card spending data from JP Morgan Chase pointed to a pretty strong month for consumption. And there's also an expectation among investors that we're likely to see some holiday shopping being pulled forward this year. So with consumers perhaps being fearful of supply disruptions and delivery delays, they could start doing their holiday shopping in October a little bit earlier, and that could artificially boost the upcoming numbers.
Turning to the dollar now, we saw it resume its rally last week on the back of the CPI numbers. Can the retail sales report further boost the dollar?
Yes, it can. No, right now the markets are pricing in 2.5 rate hikes for next year. So if we get a strong report, that pricing could go closer to 3 rate increases by the Fed, and therefore that could help refuel the dollar's rally in a sense. Now, in the bigger picture, I still think that the outlook for the dollar is quite favorable. So the American economy is just stronger than most of its competitors. Consumption is booming, lost jobs are coming back quickly, inflation is hot, wage growth is firing up, and business surveys suggest that economic growth is going to pick up moving forward. And of course, we have Congress trying to bring even more spending to this party. Now, the other side of this coin is the euro, which is still grappling with several risks that threaten growth. COVID cases have skyrocketed again across Europe. We've seen the Netherlands impose a partial lockdown. Austria and Germany are headed in the same direction. And there's also the spiral in energy prices that's squeezing consumers. And of course, China's slowdown is bad news for Europe because China is Europe's biggest trading partner. So long story short, if you combine all of this together, we could see the markets become more confident in the Fed raising rates 3 times next year, whereas the market pricing for the European Central Bank to raise rates even once next year seems quite unrealistic to me. Therefore, I believe that the risks surrounding euro-dollar remain tilted to the downside.
Marios, thank you for joining me today, and thank you for watching this Forex Preview on U.S. retail sales out on Tuesday here at XM.com.